Welcome to Not Milk Never Milk. Subscribe if you're lactose intolerant.
You start by picking the exact Nifty series and time frame that matches your trading horizon. Short-term uses 5 to 15 minute, medium uses 1 hour, longer uses daily. Once done, overlay candles and volume, then add one momentum oscillator like RSI or MACD to confirm strength. Now scan left to right and mark the most recent swing highs and lows. Make a clean trend line connecting at least 2 significant pivots so you have a structural baseline to work from. With structure in place, assess trend direction. Compare 20 and 50 moving averages to determine bias and watch for crossovers as early signals. Next, scan for classic price patterns such as triangles, flags, or double tops. These tell you whether consolidation might resolve continuation or reversal. At the same time, check RSI for hidden or regular divergences and watch volume. Strong breakouts typically coincide with volume spikes. Combine these confirmations to translate the setup into a trade plan. Set your entry at the breakout or retest, place stop loss beyond the invalidation swing, and calculate targets from the pattern height or an ATR multiple. Make sure to size the position so you risk only 1 to 2% of your account on the trade. If price gives a false breakout, price fails to hold and reverses, step back, wait for a clean retest or a new setup, and avoid averaging into a losing position as your primary troubleshooting rule.
Thanks for watching. If this was helpful, leave a like and consider subscribing. See you next time.